Here is a self-assessment question that was given to you. You had to pass the journal entries with the transactions in relation to the dissolution of a firm of Aman and Rajat on 31st March 2016 after they've transferred all the assets other than cash and third-party liabilities to realization. Their profit sharing ratio was 2:1. The first one there was a bill of exchange of 10,000 under discount. The bill was received from Derek, who became insolvent. So there was a bill of exchange of 10,000 on discount, means the firm had a bill of exchange which it got discounted with the bank and immediately got the amount. But the bill was received from Derek. So Derek was the person who had accepted the bill of exchange. So Derek is the acceptor, who has become insolvent. So as he's become insolvent, he's not going to pay the bank. So now what happens? The liability of paying off the bank would now fall back upon the firm. Therefore, firm will be paying this 10,000 rupees. So as the firm is being dissolved, we would be debiting the realization account with the amount of 10,000 which is going to be paid, and we would be crediting the bank cash or the bank account, the mode in which we pay the bank the amount of 10,000 for the bill of exchange which was discounted and dishonored. So this is for payment of bill dishonored, this bill which was discounted and dishonored. Hope that is clear. Moving on to the next. Bills payable of 30,000 falling due on 30th April 2016. So this is a bills payable, means the firm has accepted this bill and it has to pay 30,000. It was due on 30th April. It was discharged at 29,550. So for 30,000, 29,550 is being paid off. This 30,000 has already been credited to realization account. Now we are going to make an entry for showing the payment. When we are showing the payment, we will be debiting the realization account with the value of 29,550, and we would be showing the payment to cash or bank account 29,550. So this is for bills payable being discharged. Moving on to the next. Creditors of 30,000 took over stock of 10,000 at 10% discount and the balance was paid to them in cash. Now, what was the amount of total creditors? It was rupees 30,000. Now, the creditors have taken over stock with 10,000. So, whenever any asset is taken over by a creditor, in full settlement of claim, we said there will be no end. But however, here we have taken over stock. So, stock taken over. But at what value? Stock was worth 10,000, but it was taken over at 10% discount. So, we'll remove 10% of 10,000. So, that would be 10,000 minus 1,000. So, the value at which it is taken over is 9,000. So, out of total creditors, we have settled off 9,000 worth creditors. So, balance, how much creditors is left? It is rupees 21,000. This 21,000 they have set and the balance is paid to them in cash. So, 21,000 would be paid to them. So, creditors have been credited to realization account. So, we are not going to pay them. So, we debit realization account with 21,000. Credit the cash or bank account to show the payment to the creditors. This is for creditors paid off. Next, there was an old typewriter which had been written off completely. This means that there is no value of typewriter in the books of accounts. It was estimated to realize 600. Estimate, but physically it is still present there and you could sell it off, and we estimate that it would realize 600 rupees. But it is only estimation. You are not sold it yet. It was taken away by Rajat. Rajat is the partner. He is taking over asset, the typewriter, at 25% less than estimated price. So what is the estimated price? We estimate that if we sell off that old typewriter, we would get 600. But Rajat is going to take over at a discounted price of 25%. 20% of 600. That is 1/4. 1/4 would be 150. So it would be taken over at an agreed value of rupees 450. Now, whenever an asset is taken over by partner, we debit the partner's capital account. So we debit Rajat's capital account debit with the agreed value to realization account. Because it is being taken over, we debit the partner's capital. This is for typewriter taken over by Rajat, a partner, at agreed value. Going further, next one, Aman. Aman is the other partner. There were two partners, Rajat and Aman. Now, Aman has agreed to take over the responsibility of completing dissolution at an agreed remuneration of 1,000. So he has said that he will take care of the entire dissolution process. For that, he is to be given a remuneration of 1,000 and to bear all realization expense. So realization expense is also his responsibility. So here, first let us pass entry for the remuneration which is to be given to Aman. When asset is taken over, I told you we debit the partner's capital. But here remuneration is being given to the partner, Aman. So when anything is to be given to the partner, we credit that particular partner's capital. So we would be debiting realization account with the remuneration of 1,000 and we would be crediting Aman's capital account with the amount of remuneration. So being remuneration given to remuneration credited to Aman's capital account. Now, it's not over yet. We have one more part. Actual realization expense of 800 were paid by the firm. Now here if you see it is paid by the firm. But who was responsible? Aman was responsible. Aman had agreed for remuneration of 1,000 and he was supposed to bear the realization expense. So it was his responsibility. He should have paid it. But actually in practice what happened? Actual realization expense was 800 and it was paid by the firm. So there's an outflow of money from the firm. But this being responsible of Aman can be recovered by the firm from Aman. So when you have to recover something from Aman, we would debit his capital account. So we would debit Aman's capital account debit. Because it's 800 will be recovered from him. 2. Money is being paid by the firm. So you are going to have a payment by to cash or bank account. 800 got paid. So being realization expense, responsibility of Aman, paid by the firm. So this is the journal entry that we pass for the realization expense. Going to the last one, loss on realization was 54,000. So we prepared the realization account, passed all the entries, and now the net result of realization account is loss. Now for that loss, we would debit the partner's capital account. There were two partners, Aman. So Aman's capital account debit and Rajat's capital account debit. 2. Realization account. The amount of loss is 54,000. Now what is their profit sharing ratio? Let us go back and see. Here the profit sharing ratio between them was 2:1. So let us go further. Here 2:1 means 2 by 3 and 1 by 3. So this is loss on realization transferred to partners capital account in profit sharing ratio. So now 54,000, the denominator is 3, so I divided by 3. 3 ones are, so 2 is left, 8s are, 0, 0, 0. So 18,000 into 2, 36,000, and 18,000 to 1, 18. So Aman's capital account debit 36,000, Rajat's capital account debit 18,000, to realization account 54,000 would be the entry for transfer of loss on realization. So this is how we solve this particular question. Thank you for joining me today. Have a great day.